Not every day that we have a bank failure.
A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
U.S. Treasury Secretary Janet Yellen has called SVB collapse a matter of concern.
Joe Biden has been a disaster for the economy.
Also, U.S. banks have lost over $100 billion in stock market value over the past 2 days.
Silicon Valley Bank, that was a combination of a negligent board of directors and idiot management.
Joe Biden is leading us toward a Great Depression. I've been saying it for a long time.
Fear that more banks might face the same fate against the backdrop of high inflation and ever-rising interest rates.
Part 1. The rise of Silicon Valley Bank. Silicon Valley Bank wasn't always the big name in tech finance that we know today. It started out as a scrappy upstart founded by a group of entrepreneurs who saw an opportunity to serve the booming tech industry in the early 1980s. Back then, tech startups were seen as too risky for traditional banks to lend to, but Silicon Valley Bank saw potential where others didn't. As the dot-com boom took off in the late 90s, Silicon Valley Bank was perfectly positioned to ride the wave of success. They were the go-to bank for tech startups looking for loans to fuel their growth. But they didn't stop there. They also provided a range of other services that catered specifically to the needs of tech companies, like venture capital, wealth management, and international banking. Part 2. The expansion and risk-taking. As Silicon Valley Bank grew and gained success, they began to expand rapidly. They started lending to companies outside of the tech industry, which was a significant departure from their original focus. They also began to take on more risk, as they became more confident in their ability to manage it. At first, this expansion paid off. Silicon Valley Bank's loan portfolio grew, and their profits soared. But as the bank continued to take on more risk, they began to run into trouble. Many of the loans they had made to non-tech companies turned out to be bad investments, and the bank started to experience significant losses. Despite warnings from some investors, Silicon Valley Bank continued to take on more risk. They also expanded their services into new areas, including healthcare and wine industries. This rapid expansion and increased risk-taking would prove to be the downfall of Silicon Valley Bank. Part 3. The Fall and Bankruptcy of Silicon Valley Bank. In early 2023, Silicon Valley Bank declared bankruptcy. The bank's assets were liquidated, and it became clear that the bank's rapid expansion and risky investments had caught up with them. The COVID-19 pandemic had also played a role in the bank's downfall. The pandemic had hit the global economy hard, and Silicon Valley Bank was not immune to its effects. The bank's loan portfolio was hit hard by the pandemic, and they started to experience significant losses once again. The bank's investors had become increasingly nervous about the bank's financial situation, and in the end, they were unable to recover. The bankruptcy of Silicon Valley Bank was a tragic end to the story of this once iconic bank. Part 4. Lessons learned and what's next. The story of Silicon Valley Bank provides important lessons for investors and financial institutions. Rapid expansion and increased risk-taking can lead to significant losses, and it's important for companies to properly manage risk and diversify their services. As for what's next for Silicon Valley Bank, it's unclear. The bank's assets are being liquidated, and it's possible that some parts of the bank may be sold off to other financial institutions. However, the once great brand that was Silicon Valley Bank is no more. But this isn't the end of the story for the tech industry. Other banks and financial institutions will step up to fill the void left by Silicon Valley Bank, and new startups will continue to emerge and grow. The lessons learned from Silicon Valley Bank's rise and fall will serve as a cautionary tale for all those who seek to succeed in the ever-changing world of tech finance. In conclusion, the story of Silicon Valley Bank is a cautionary tale for investors and financial institutions. The bank's rapid expansion and risky investments ultimately led to their downfall, and the COVID-19 pandemic only added to their financial woes. In March 2023, Silicon Valley Bank declared bankruptcy, bringing an end to the story of this bank. If you're still watching the video, do subscribe and hit that bell icon so you never miss any of our new videos. Thanks for watching!